So it is 1 p.m. Eastern Standard Time, so I am starting the stream officially. Anyone who joins later will just join in a bit later, but for the most part, this will be recorded. Okay, and in this stream, I will be discussing how I draw my zones. So this will be covering basically something you have probably seen where I've discussed in my previous analysis videos, whether it's a crypto update video or something for forex, or maybe something that I briefly covered in the stock market, but it's a technical approach towards how I draw my zones. So that will include daily zones on the daily time frame, weekly zones, hourly zones, and even 15-minute or 5-minute zones, depending on the type of trader that you are, right? So I always discuss zones, and zones sort of go hand in hand with, in my opinion, better understanding the market structure as a trader. So if we use an example over here, and I actually discussed this yesterday in my private live stream, which I have 5 times a week. And so, quick disclaimer, if you guys are interested, head on over to this website. It's linked below pretty much all of my videos. And you can click over here, right? This is where you can gain access to 5 in-depth live streams that I have every single weekday. They're at least an hour long. I have additional guides, additional videos, and I'm always in the chat helping members out with either trade setups or discussing the markets and just being there as someone who can help guide you as a trader. So it's technicals, fundamentals, it's forex, crypto, stocks, and yeah, you have more benefits here. So if you click on this, you could learn more and join the elite community if you're interested. For the most part, for my videos, I like to use daily and weekly zones, and occasionally I will use hourly zones, right? So that's because for the most part, I'm a swing trader, right? So swing trading, a lot of this just depends on the time frames that you typically look at and how long typically you're in a trade. So for me, I'll be in a trade anywhere from a day to a couple of days. So for the most part, I'll be looking at the 4-hour time frame, the daily time frame, the weekly, and I'll briefly look at the monthly, right? So for that's for swing trading. And then if you're a day trader, right? So I'm just going to put day over here. You might occasionally just briefly glance at the weekly, but for the most part, you'll be looking at the daily, the 4-hour, maybe the 1-hour, and your entries, if you want to really pinpoint it, your entries might be based off of the 15-minute. And then if you're a scalper, right, so you're not in a trade that long, right? So a day trader might be in a trade for an hour or a couple of hours. Typically, they're in and out of a trade within a given day, right? You might have some trades that extend a bit further, that you might decide that you like your entry and you want to hold on for a couple of days, so that's different. But most day traders are in and out each day. When it comes to their trades, they might take multiple trades, and then scalpers are the ones that will take the majority of trades, and they're in and out usually within a couple of minutes, or they might hold on to a position perhaps for an hour or so. So scalpers are the ones that will be looking maybe at the 1 minute, the 5 minutes. Let me write this out over here. The 5 minutes, the 15-minute, and maybe the 1-hour and 4-hour market structure will be their basic sort of bird's eye view, long-term overview of the market structure. Okay, and additionally, if you are a scalper and day trader, you might be using level 2 data, right? So the order book, just to sort of, if you want to gauge take a look at the order flow, but that's typically how it is. All right, so let me delete this really quickly and just continue. Right, so depending on the type of trader that you are, that will dictate the types of zones that you draw. Okay, so if I'm someone who's a scalper, for me to draw zones on the daily or on the weekly time frame, like in this example on MATIC, are not really going to be important. Now I could glance at the daily if I'd like, but for the most part, I will be taking trades right off of the 1-hour or the 15-minute time frames. So if I'm going to be drawing my zones, I should really only select 2 or 3 time frames, right? So if you're a scalper, ideally you should probably draw your zones either on the 5, the 15-minute, and then on the 1 hour if you want a larger perspective of the larger market structure, so the higher time frames. As a day trader, right, you, for the most part, you might be drawing your zones on the hourly, on the 4 hour, and probably the daily. And then if you're a swing trader, it might be the 4 hour zones. So you'll have 4 hour zones, daily zones, and then weekly zones. So this is why for my videos, for the most part, you will see that I draw zones on the weekly, on the daily, and on the 4 hour. All right, so now let's actually dive into how I would draw my zones here. Okay, so let's start off on the highest time frame. So maybe the weekly. So what I like to do when I draw my zones, right, is I like to take the highest time frame that I'm going to be looking at, right? So as a swing trader, I mostly look at the weekly or at the monthly, and then I try to pick out where we've tested multiple times before, right? So if I see a region that's been acting as either support or resistance on multiple given occasions, then I will have that as a point of interest. So one example would be, so I set it over here. I initially started off having set this zone over here. So I'm using a horizontal line. You could use a rectangle. I will be adding that afterwards, but initially I had it marked here, but I see a stronger level a bit further up, right? So more or less around the $1 mark. And this is something that you'll find that when you draw your weekly zones, at least to me, I find that they will typically line up around psychological levels. So in this case, it's the $1 mark, right? It doesn't have to be exact, but this is what I find is typically the case with my weekly zones and even my daily zones. And that's because round psychological numbers are where you'll either have an abundance of orders placed or they mark out different milestones, right? So notice how MATIC, before we dipped all the way down, it pushed all the way up to the $3 mark. We actually tapped it exactly at the $3 mark, maybe slightly above $3. And then we dropped all the way down, right? The fact that we hit the $3 mark was seen as a milestone. And this is probably where a ton of people were taking profit. So either at the $3 mark or slightly below it. Okay, and so in this case, we can see that this weekly zone lines up around the $1 mark. And so now what I do, and this is something that I find to be helpful in crypto especially, and that's where I discussed where you'll spot a round psychological number. So in this case, it's the 1 hour. And again, we're on the weekly time frame. And then the next region where I see where we have a ton of rejections in the past is around the $2 mark. So I'm basically extending this by $1 more or less. And then the next one will be around $3. So we can see that although we technically didn't tap this level back in May of last year, we got pretty close. Okay, and then over here, we actually tapped the $3 mark. And then if I look at the $2 level, we can see we tapped it here. We got pretty close over here, not exactly, but we got pretty close. Then we rejected it over here, right? So although yes, we did, although yes, we did technically spike above the $2 mark, notice how this weekly candle closed below it. So it showed us a sign of a rejection. So I'm also paying attention to the closing prices when I draw my zones, right? So levels that we've pushed through and tested, but closed outside of, okay? And so over here, if we extend further to the right, we can see that once the price action finally rallied, we had this weekly candle over here, right? It closed bullish. It did push above the zone, but notice how much higher it closed compared to these candles on the left, right? So in this case, it pushed above the $2 mark and it closed significantly above it. And then we retested it again, but then we rejected it, right? Which is why the next weekly candle and the one after that closed as wicks, right? So a wick is basically a representation that outside of the range that we have between the opening and the closing prices of candles, we, in this case, since they're bullish, we tested below the opening price. So everywhere that we went below the opening price, in this case, would have given us this lower wick. And because we closed back above, that's a sign of a rejection. And after that, we rallied. Okay, and then we dropped back down. We can see we rejected it again, but we didn't close it below it. And then we had this significant bearish candle that came in. So this would have been during the middle of January. So this was a couple of weeks ago. And then we closed below the $2 mark, right? So to me, if I'm looking at this in terms of the overall market structure, then I understand that for the most part, okay, this is not a 100% one size fits all equation, but for the most part, right, we can see that when the price action closed below the $2 mark, in many cases, this is where we were ranging, or this is where this $2 mark, so this weekly zone would have acted as resistance. So this would have marked the upper portion of this overall range, and the lower portion, or the lower weekly zone, I should say. So around the $1 mark, this would represent the lower portion of the range. And of course, we do have a scenario like the one over here, where we temporarily pushed below, significantly closed below it, but then we quickly pushed back up, right? And so in this case, this would have been a liquidity grab where we pushed below this low, we pushed below this low, right? So any long-term traders that bought in over here that might have had their stop loss set right below these lows, notice how they would have gotten taken out. And then as soon as they got taken out, this is where the dynamics of the overall market structure and the trend just continued pushing higher, right? So to me, this is a liquidity grab, because once we spiked below this region once, we didn't retest it, and we fluctuated a bit within this range, and then we continued pushing higher. Let me delete this really quickly and expand upon the weekly, and then expand upon the daily zones, right? So in this case, right, because I had these horizontal lines drawn, right, like I said, I expect for the most part to have rejections either where these regions act as resistance, like it did over here, or as support, like it did over here. Now, if you'd like, this is personal preference, if you want to keep it cleaner, you can just keep the horizontal lines on. But what I like to do is I will use a rectangle tool, right? So something like this, and I will extend them out typically. So this is where I might have my horizontal line drawn. Maybe I have it turned off, and then I have this marked out as my weekly zone, right? So I just set that in the back. And the reason why you want to do this, right, is because when it comes to these zones, understand that although yes, the $2 mark, the $1 mark is a round psychological number, when it comes to these zones, which are basically support and resistance, more or less, they are not a single price, right? They represent a price range, because on one broker, you might be looking at what the price action is doing, like currently. So let me actually turn on the price line. I forgot I have this turned off, right? So currently we're at around 1.427, but for another broker, it might be 1.426, 1.425. So these would represent my weekly zones, right? So if you're looking at this in terms of understanding the overall market structure, right, the distance between this weekly zone, more or less, and this weekly zone, so we have one down here at around $1, the next one's at around $2. This represents more or less a price range, right? And then this represents a price range, right? So if I'm looking for, to see if the price action is trending pretty heavily on the weekly time frame, or maybe if I'm looking for a region where I can anticipate a reversal or a fake out or a break and retest, this helps me when it comes to understanding the overall market structure, because I know for the most part that if we continue fluctuating between these two weekly zones, then we're basically in a range, right? But in this example over here, when we started forming higher highs and higher lows, especially when we pushed above the midpoint of this range, this is where I could have aligned myself to favor the upside more, right? So this is where you can look for buy opportunities either at the retest of the midpoint like we had over here, or buy opportunities where we retested the lower portion of this overall range, so this lower weekly zone. Or if I wanted to take a break and retest and rejection setup, then this is where now if we drop down to the daily chart, this will make a bit more sense to you guys, right? So over here, we did have a fake out. So you could either count this as a probable loss if you were looking to buy at the retest over here, or if you simply waited for the weekly time frame to close, or sorry, this weekly candle to close. So if you wanted to play it a bit safer and you're not as aggressive, then waiting for this to close would have showed you a sign of a rejection, that we're rejecting this weekly zone. And then you can see the next candle pushed up again, rejected it with this upper wick. Then we pushed down, and then finally, once we pushed higher, so this was during the months of November and December. So let's go back to the daily. Once we finally pushed higher and marked a higher high, this is where now a retest of this weekly zone acted as support, more or less. Now, sure, we did spike below it, but then we quickly closed back above. And so if you guys notice something interesting, right, if we take a look at this over here without even dropping down to a lower time frame, this is where a lot of people would have spotted your typical inverted head and shoulders formation. So now we'll see this a bit better on the 4 hour, right, where we had the first shoulder, right, you have the head, and then you have the second shoulder, which is basically where you have this low, higher low, right? Liquidity was gathered up below these lows where we spiked down into this smaller daily zone, which I'll get to in just a second. And then the price action continued pushing higher, right? So this is typically why it makes sense to first look at the overall market structure, make sense of what exactly is unfolding with the price action, right? So this is where some critical thinking needs to be applied, as opposed to simply memorizing different patterns. So just memorizing a head and shoulders pattern or an inverted head and shoulders pattern and then looking to trade it. So this, in this case, made sense because it was rejecting this overall weekly zone. So on the 4 hour, you have an inverted head and shoulders formation, but where exactly did this play out? Well, it played out during the break and retest of this weekly zone, where initially around the $2 mark, we can see this region acted as resistance, but then finally, once we pushed a bit higher and closed significantly above it and marked a higher high. So at this point, we pushed into the midpoint over here. Your odds are much higher that now the price action is going to reject this region and continue pushing higher. So this is how you could have aligned yourself with understanding the overall market structure on the weekly time frame to plan out your overall bias of where you're looking to trade, right? And then if we continue further, so if we look to the right over here, this is where we can see this region briefly acted as support, but notice how we formed lower highs. And then when the next weekly candle came in, closed significantly below it, pushed into the midpoint. This is where you could have aligned yourself towards the having a long-term bias of looking for sell setups, right? Because at this point, because the market dynamics are changing, where now we pushed into the $3 mark, we significantly rejected it, we pushed all the way down, right? So the bears are outweighing the bulls. This is where now, if you're looking for trade setups on a lower time frame, so you don't even have to be a swing trader, but just being a day trader, it would have been more favorable from a probable standpoint to look for sell setups, right? So even if you didn't catch this giant bearish impulsive move, right? Let's go back to the daily, just waiting for a break and retest of this weekly zone. So where now it broke through it, retested, it's likely to act as resistance. So you have your break, retest, rejection, and then continuation. Having this type of bias could have presented you with a sell opportunity that you could have taken, right? So again, with the patterns, this is where some traders would have looked at this and said, well, we have a double top, or we have an M formation, or whatever term you guys have seen online. But again, you need to make sense of where these patterns occur. I'm not saying that there's anything like necessarily completely wrong with patterns. It's just that you need to understand where they apply, okay, which heavily revolves around the market structure. So you need to first look at the market structure and then align yourself with these patterns. Don't do it the other way around where you memorize these patterns and then whenever you spot one, you take a trade, right? You need to make sense of the overall context, right? So now that I've discussed my weekly zones, and for those of you that are wondering what my take is on MATIC, right? This is where now my daily zones will be a bit more helpful. So that's what I'll be discussing next, right? So let me just, you know what, let me go over here. Let me quickly delete this and then we can move on. So again, for me, my weekly zones are a bit wider compared to my daily zones because we're on a higher time frame. So that's something that you guys will notice, where depending on the time frames that you're looking at, your zones might be wider or they might be narrower, right? Because obviously on a higher time frame, the price action is pushing a bit more compared to a lower time frame, which is why, for example, right, this let's take a look at this, right? This entire bullish candle that we had over here, where it pushed from this weekly zone to the next weekly zone, on a weekly chart, it's just one candle, right? It's definitely it's a large bullish candle, that's for sure, but it's just one candle. However, right, on a lower time frame, before I drop down any further, if we were to take a look at the 15-minute chart and we start drawing 15-minute zones, they're obviously not going to be this wide, right? Because on a 15-minute time frame, the overall market structure and the trends that continually change left and right, they are playing out a lot more frequently because you're dealing with smaller price ranges, right? So on a 15-minute chart, my zones might be this wide, right? They're going to be tinier in size and they're going to be a lot closer, which is typically why I think earlier we had Louise. He asked a question, which is where he stated that his zones were pretty messy. He didn't know which ones to prioritize. Well, like I said in the beginning of the stream, it depends on the type of trader that you are and the time frames that you're looking at, right? So this is where if you're a swing trader, then you probably shouldn't be drawing zones on the 15-minute unless you really want to pinpoint your entry, because then your chart will be incredibly messy. And then likewise on the 15-minute, if you drop down, you don't need to be drawing zones on the weekly, or you could look at them, but you notice how much larger they are, right? So they're a little bit less relevant. Okay, so now let's move on to my daily zones. Okay, so if I'm drawing a daily zone and I have my weekly zones marked out, a quick trick that I have, or at least what I find works for me, is typically the width of my weekly zones, right? And it doesn't have to be exact. I could slightly adjust it if I'd like, but for the most part, I found that the width of my weekly zones will make up the difference, or the distance, I should say, between my daily zones. So right off the bat, if I draw my daily zone over here, right, and you can see it's marked out as a daily zone. So you know what, I'll just keep this on for now so that you guys aren't confused. But like I said, right, the distance between the upper portion of this weekly zone and the lower one is basically going to be the distance, more or less, that I'm going to use for my daily zones, right? So something more or less like this. So now if we extend this further to the left, we can see, and something interesting plays out, where notice how for the most part, the distance between these two zones, right? So this daily zone is resistance, this one is support. For the most part between them, this is where the price action was consolidating. So one perfect example is over here, where when the price action was fluctuating between the two, right, we were basically consolidating. So by looking at the market structure, I can understand that, okay, we're trapped between them. So we're consolidating. So we can technically break out in either direction, but because on a higher time frame, right? So now you're adding different layers to your analysis. So as I discussed before, on a higher time frame, because this was a liquidity grab on the weekly chart and we're technically retesting this weekly zone again, I know that there's a greater chance that although the daily is consolidating, there's a greater chance that we're going to push higher, right? And in this case, you have an example of where we pushed, significantly closed above these recent highs over here with this bullish daily candle. We retested it, we rejected it, and then we continued pushing higher, right? So this is just one example over here. And for me, because I want to keep my charts a bit cleaner, I eliminate my daily zones, the ones that are around my weekly zones, and I simply keep the ones that are not around my weekly zone. So basically, if I continue extending this further, and what you guys will notice is I try to keep a similar distance between them. So it doesn't have to be exact, but for the most part, they are pretty similar in distance, where now if I extend these, right, so more or less something like this, notice how these daily zones, so the ones that I'm drawing right now, notice how once again they align between the distance between this upper daily zone and this lower one aligns between the range that I have drawn for my weekly zone. And let's extend this to the right. All right, so let's just extend this, and I'm gonna see if you guys have any questions. So like I said, drop them down in the community chats. I have these zones extended now, and if you guys want to, you don't have to extend all the way to the left, right? So you could just pay attention to the most recent price action if you want to keep it cleaner. And like I mentioned a minute ago, I simply delete the ones that are around my weekly zone. Although I am aware, right? So in the back of my mind, I'm aware that they exist. I just don't have them drawn just to keep the chart a bit cleaner. But in any case, right? If we sort of break down what exactly happened when the price action approached these daily zones, more or less, right? Remember, we were discussing the one that we had over here where the price action was ranging. Well, we technically have one over here, although it's not drawn at the moment, where we can see that this is where the price action wicked down, tested it, wicked down again, right? It consolidated a bit. So this would have been a consolidation between this zone and the upper one over here. And if you want to refine it a little bit, right? So if you want to prioritize the most recent price action, you can refine it just a bit, but more or less, like I said, you will have these marked out around round psychological numbers, more or less. So this one in this case is around 1.3, 1.35, and then this one's around 1.6, 1.65. Okay, which makes sense that basically every 30 to 35 cents or so, we have a distance between these. So yeah, roughly every 25, maybe roughly every 30 cents. So that's something interesting that you'll see. In this case, it's for MATIC. For another crypto that you look at, so maybe something like Bitcoin, you'll see that it's every couple $1,000s or so. Okay, but in any case, right, if we break down what happened, we can see that the price action over here, when it was trading between this zone and the upper zone, more or less until we got a significant close, right? So in this case, it did close slightly below this low, but this was just a quick close, retest back up. But then once we finally closed significantly below it, this is when the market structure pushed down to the next zone over here, and it started consolidating and moving sideways, right? So we moved from one range to the next. So that's one way to look at the market structure and to understand what's happening, right? So if you're a trader and you see that the price action is consolidating within a range, then on a lower time frame, you know that you have trends that are playing out in either direction as they're bouncing in between each range, right? Because although on the daily we are moving sideways over here, so we're technically, so this was last year where we were bouncing between $1.30 up to $1.60, more or less, on a lower time frame. So let's drop down to the 1 hour. Let's scroll all the way back. This is where you could have simply played the range, and you could also include the midpoints, or you could have drawn your hourly zones, which I will draw in just a minute. But this is where, right, when we push from the lower portion of this range to the upper portion, you have a bullish trend. And then once you push from the upper portion back to the lower portion, then you have a bearish trend. So by having this type of bias on the daily chart, on the hourly chart, if you're someone who's a scalper or a day trader, this can help you out with spotting different trading opportunities that you'd like to take, right? And in this case, because we're rejecting the lower portion of this range and moving to the upper portion, in this case, being more aligned towards having different buy setups, right? So being a bull in this case would have been more favorable from a risk to reward perspective, right? So being a seller, technically you could have gone counter trend, but if the price action is pushing from one point of the range to the next, so in this case we're pushing up, then it's more favorable to be a buyer on a lower time frame, right? Because you're obviously more likely to create higher highs and higher lows as opposed to lower highs and lower lows. And the reverse would be true over here, where we can see the bears would have had greater opportunities to capitalize on greater take profits, right? So the risk to reward ratios are more favorable as you're moving from one point of a range to the next. Okay, so these are just a couple of examples. Let me delete all this and continue. So from here all the way to here, I will delete that, and let's get back into discussing the daily chart. So now let's look at some recent price action. Okay, for those of you that are wondering what my take is on MATIC, and then I might also take a look at another coin as well, just to spice it up for you guys, so that you can see what my take is on the overall market, right? So right now we can see that MATIC is basically consolidating pretty heavily, right? So on the weekly, we have pushed from this upper weekly zone to the lower one, right? But we're basically trapped around the midpoint, okay? And we can see that in the past, this is a region that was retested and rejected, and simply due to the fact that if we look at these weekly candles, we can see that there's a little bit of hesitation to push lower. So we did wick down over here, we formed a lower low, but we closed back up around the midpoint. And then this candle formed an upper wick, and so it looks as though we're rejecting it, but we still don't have that confirmation just yet. Okay, so let's go back to the daily chart, right? And so now we can see for the most recent price action, more or less we are, right? So we do have this downwards trend line that so far has been respected quite well, but at this point it's becoming pretty obvious, right? So if it were to break right now, I think now is the time where a ton of traders would be in the wrong side of the market. So they'd be in the wrong direction if they're now trying to take this trend line rejection, and this actually keeps going even higher, right? So this has been rejected at least 4 or 5 times now. So at this point, right, any trader that's looking to take the rejection again is more likely to, in my opinion, experience a loss, right? And so we can see on the daily that the price action is ranging. How do I know this? Well, because we can see, like I discussed, we pushed below this lower daily zone, but then we wicked back above. And then this upper daily zone, for the most part, was a liquidity grab for me. Or you could just see it as a rejection, where technically we did push above it. But notice how this daily candle, right, closed within the zone and rejected it, right? So this is where, if you're someone who's playing it a bit safer and you're not a breakout trader, which is pretty tough to do, in my opinion, as opposed to starting off with understanding the markets through break and retests before you move on to trying to be a breakout trader. That's just my opinion. But if you were someone that was looking to buy this push, so let's rewind this back, it would have been safer to wait for a solid break and retest, ideally with a daily candle that closed significantly above this zone, right? So in this case, it didn't do that. So maybe if it did do that, right? So if you waited for this daily candle to close bullish, so maybe up here, and then a bearish candle, so the next one, let's say it retraces a bit lower, then you have a wick followed by a rejection. This is where now you can look for a potential break and retest opportunity, right? But we never got that in this case. And so if I play it forward, we can see what happened afterwards, right? So now that the price action is ranging, and if you're someone who's a swing trader looking at the daily chart, now it pays to simply either align yourself to take a trade based on a rejection of either side of either this daily zone and this daily zone, right? So align yourself with taking a trade somewhere here or somewhere here, which will be better than simply entering a position over here, because we don't know how much longer the price action will consolidate, right? If it consolidates for a few days from now, if it continues consolidating for the next couple of days, then you're basically going to be stuck in a drawdown and you're not going to know what to do, right? So this is where, for my analysis videos, this is where I align myself with different probable setups, right? So this is what you could do if you want to take some potential break and retest opportunities over here by simply looking at these zones and understanding what the market structure is doing, right? So because we're ranging and we're moving sideways, unless you want to sit through a range, if you want to play it a bit safer, you can wait for a break and retest in this case, right? So it's all in the laws of, it all goes according to the laws of probability. You're never going to know exactly what happens next, but you could lean more towards one side or the other, right? And so this is where, going back to a higher time frame, you can sort of make sense that, okay, we've pushed down quite a bit, we retraced, we pushed down again, but we're rejecting the lower portion of this range again, right? So this is now where, if we go back to the 4 hour, you can tell yourself, okay, let's actually do the 4 hours. So not the daily, this will be easier to see. So now you can tell yourself, okay, if we push down and we reject this range again, so maybe at this point we create a double bottom in this case, then this is where you could align yourself with a potential buy opportunity, right? In case we continue pushing higher and continue pushing within this range, or let's say we break out of this range. So you have different opportunities. You could either enter here and either target the midpoint or the upper portion of the range. So you can have different, let's say, take profit strategies, right? So maybe, so you could have your stop loss set below the middle or outside of this lower daily range. So that could be one setup that you could align yourself towards. And the next one can be, like I said, right? You take profit at the next range. And the third one, right? If you're extremely patient and you want to leave a partial position open, or you can simply choose one of the three. It depends on your strategy, how aggressive you are, how much patience you have, right? Then you can hold the third one in case we break and retest above this overall range and continue trading higher. Okay, so because we've been continually rejecting this range, I know that the market structure is simply moving sideways, right? So the market structure is being respected on the 4 hour or on the daily chart because we haven't significantly broken and retested and continued trading above any of these zones for quite some time, right? So it's been about a month that we've been simply fluctuating. So this is where I know that by looking at the overall market structure, right, we're simply ranging. So I'm just going to hold off and wait. Okay. And we can even see in the past that these daily zones, for the most part, we can see that, like I discussed before, the price action, as when it was trapped between these zones, for the most part, it was ranging. And so this is where you could have had different trade setups on a lower time frame if you're simply playing the range, right? And so now let's continue a bit further to my when it comes to discussing hourly zones. Okay, so hourly zones are basically the same thing we just did, where we took the weekly zones, right? We dropped down, drew our daily zones, and notice how we're going to have more daily zones in between the distance that you have between your two weekly zones, right? So we have one weekly zone here, the next one is over here, right? I don't expect to only have one daily zone. I'm going to have multiple daily zones in between. So in this case, I have two, and technically we have more if I include the ones that I had drawn previously, right? And so now we're going to do the same step, except now we're dropping down even further. So let's drop down maybe to the 2 hour chart. or the 1 hour, and let's draw some hourly zones, right? So I'm doing the same thing again, where similar to how I dropped down from the weekly chart down to the daily chart to draw either my weekly zones or my daily zones, I'm doing the same thing, but on the hourly chart. And so this is where now I might take a different color. So let's do, in this case, I have it set to yellow. And once again, right, the distance, the width of my daily zones, more or less, that distance is going to mark out more or less the one zone and the next on the when it comes to my hourly zones, right? So over here, notice how when the price action was consolidating pretty heavily in the middle of this daily zone, right? So let's actually adjust this a bit higher. This was basically consolidating between two hourly zones, right? So at this point, when we rallied all the way up from here to here, right? So when we had this bullish trend and I saw that the price action was consolidating, right? When it comes to ranges, for the most part, you could break out in either direction. So this is where you could align yourself with either a break and retest when it comes to this hourly range, or you can simply trade the range, right? So although this is the 1 hour chart, which is already a pretty small time frame, on an even lower one, so on the 15-minute, right? This is where you could look for, or even on the 5-minute, I think this is an even better example. So if you're someone who's a scalper or a day trader, this is where, once again, like I discussed previously, when you're pushing from point A to point B, right? When we're going from either when we're going from the upper portion of this hourly range to this lower hourly range, right? So this zone to this zone, this is where sell setups are more favorable. And then when we're pushing from the lower portion of this range, so this hourly zone to this one, this is where being a bull is more favorable from a risk to reward perspective, right? So you're basically, if you're basically playing the range, this is where you could align yourself as a scalper, as a day trader, and you know which direction you should lean towards from a risk to reward perspective. Okay, so let's go back, let's complete this. Right, so as I discussed, basically the distance between the width of my daily zone basically marks out my hourly zones, and now we're doing the same thing, where I'm basically going to extend one over here. The next one is more or less over here. Like I said, you can slightly readjust your daily zones to, if you want them to be exactly marked the way that you want it to, then don't be afraid to slightly readjust them. But for the most part, this makes sense to me, because we can see this is a region that was rejected before. So we rejected it once. Then we had this V formation, which basically on a higher time frame is going to be a wick or a liquidity grab, where we dropped below this low, gathered up liquidity, pushed higher, right? So let's go back to the 1 hour. And then notice how once we finally retested this region again, this is where it acted as support. Okay, let me actually go on to the 2 hour so we can get more data in at once. And now if we take this and we basically draw out and extend a similar range, so like the one we had over here, more or less, you notice how for the most part, when the price action is fluctuating in between each zones multiple times, this is where you have a range, right? So more or less around here, we can see that when we finally broke through, retested, pushed lower, right? This would have marked the lower portion of the range. Over here, where it briefly acted as resistance, and then over here it acted as support. This would have marked the upper portion of the range. And when we, for the most part, continued consolidating, this is where we were basically bouncing between this hourly zone and the next. Okay, and so that's one thing that you will notice when it comes to analyzing the overall market structure, is that when you're in a trend, for the most part, you're pushing from one range to the next, right? So I know this is a bit messy over here. I'm going to delete some of these in just a bit, but basically, like I discussed earlier, right? We were ranging over here. So this is an hourly range. When we finally broke, retested it, and rejected it, this could have presented you with a short-term sell opportunity on a lower time frame. But regardless, right, you know at this point that the market structure is broken. It's likely not being held up, because not only did we mark a lower low where we pushed basically into the midpoint of this range over here. But now when we're retesting it, we know that there's a greater chance that since we're retesting the lower portion of this range, we're much more likely to reject it, right? So now you can see how we're basically pushing. We pushed from this level to this level to this level over here to this level over here. And then over here, this is where, once a trend starts to become more obvious, and once, the supply and demand dynamics start to change, right? So over here, we had more supply was outweighing the demand, but then slowly over time, the bulls come back in, right? So demand kicks back in, and we can see how the retracements started getting larger and larger each time. So in this case, we temporarily pushed into this range, but now we're back to this one. And so right now, right, this is a live analysis. I'm leaning more towards us continuing to push down below these lows marked over here. Now, does that mean that we're going to push right away? Of course not, right? There's a chance that right now, although we still have an hour left for this 2-hour candle to close, let's go on to the 1 hour, right? We still on a lower time frame are trapped in this tiny range. So if we are going to push a bit higher and retrace and form a lower high, it would be over here. Okay, and so then that's where we can get a probable continuation from point A down to point B. And at the very least, if not that, then you have this midpoint over here, right? So as a seller, you could align yourself with different probable opportunities, right? So your stop loss could be set over here. There's really no point having your stop loss set above this high, because this is basically a liquidity grab where we pushed above these recent highs over here, gathered up liquidity, right? So if we're going to push into here, then at this point, the market structure is likely broken again, and we're likely to push higher. So your stop loss could be set outside of this zone, maybe a bit higher if you want to play it safer, but it doesn't have to be above this high. So that's one setup. And the next one can be, obviously, if you're more aggressive, you could lower your stop loss. So it depends on your plan. But the next take profit could be the next zone, right? So this is how you can have different partial take profits set depending on the type of trader that you are, right? And you can take advantage of this knowing that on the 4 hour, like I said, we're basically ranging. Why? Because we're trapped between this zone, this hourly zone, and this hourly zone, right? And if we want to make this a bit cleaner, like I said, the zones that are outside of your daily zone, you can delete it, but in the back of your mind, you're aware of the fact that these are levels that are likely to act as either support and resistance, right? So we're pushing from one range to the next range, to the next one, to the next one. And basically in this case, right, we're forming lower lows and lower highs. And when we're pushing higher, right, so when we're pushing from here to here, we were doing the same thing, although this was a more impulsive move where we were basically pushing from this range to the next range to this range over here. Or technically you have two smaller ranges, but you guys get the point, right? So this is where understanding that the price action basically unfolds in levels, right? So that's how the market structure changes. By understanding this, you can better understand where you can enter potential break and retest opportunities, or where you can enter a trade that follows a particular trend, right? And one neat thing that you guys will notice is, for the most part, when I mark these out as ranges, right? So for those that have looked at different Wyckoff schematics or any accumulation or distribution cycles, which more or less lines up with Wyckoff, you will notice that this is typically what happens, right? This is where price action is either accumulating or distributing, right? So you will have consolidation within these ranges, right? So that's one way how you can quickly digest, Wyckoff if you choose to use that type of concept in your trading, because all of that plays out in between ranges. Let's see, is there any suggestions about what I can cover right now? I can quickly go over another chart and then we can end the stream for now, right? But for the most part, you guys understand what I'm doing, right? This is how I draw my weekly zones and how I draw my daily zones and hourly zones. And if I wanted to, I could take this a step further, right? So we have these hourly zones. If I wanted to, I could drop down, or actually, sorry, these are my daily zones. And I had my hourly zones drawn earlier in yellow, but if I wanted to, I could drop down to the 1 minute or even the 5 minute and continually do this, right? The markets are fractal. So you're going to have repeating patterns, right? So the market structure repeats continuously as you drop down onto lower time frames or as you move on to higher time frames, right? Which is why you can have a trend that's inside of a trend, or a range that's inside of a larger range, that's inside of another range, etc. Okay, so I hope that's clear. And for those that are wondering, right, my zones are more in line with support and resistance, right? So this is basically a visual thing, and I anticipate that there are times where, if anything, half the time I do anticipate that you will have these spikes above or below these zones, right? But I'm waiting for a close and some type of confirmation if I look for a break and retest, or if I look for a rejection, right? So these, although in many cases they will line up with supply and demand, and sometimes they might line up with order blocks, they are a bit different, right? So I'm not looking at the most extreme prices, right? I'm not looking at any price imbalances. So like the one we had over here, this is a bit different, where I'm basically looking at where we've had the most rejections in the past, right? So we've had this region acted as resistance temporarily, then it acted as support, then resistance, right? I'm looking at where we've been rejected the most in the past. And like I said in the beginning of the stream, you want to look at how the candles close, which can give you a probable clue as to whether or not the price action, or if the market structure is being held up, right? So again, look at these basically as magnets. So when it comes to a magnet, right, you're going to have attraction towards a level. So look at this as where price action is being attracted to the most. You know what? Let's do gold. I think gold is a very interesting one that I was also taking a look at. So let's take a look at gold. And you could already see that I basically had these drawn from the other day, right? So this is where, you know, I was doing a private live stream. I had these discussed, right? So quick disclaimer before I continue, just quick reminder, guys, if you want to gain access to live streams that I have 5 times a week from Monday to Friday, then you can become an elite member. You also gain access to additional weekly market update videos, and I have additional guides, and I'm always in the chat helping out different people with either their trade setups and taking different requests as to what I should cover in live streams, or I teach different concepts, right? There's a ton of members in there that are super helpful. You can ask any of them for some honest feedback from the community, and I always tell them to be honest, right? So this is not something where I'm shilling a service that is full of BS and I'm, you know, paying people to give fake feedback. You can DM anyone and, you know, ask them for an honest opinion. Okay, and so far, you know, most people have learned pretty quickly. So I'm glad to hear that my live streams, my private live streams, have been helpful. All right, so let's continue anyways with gold, right? So for gold, I have this weekly zone, although I didn't have this gray rectangle drawn out. So let me just extend this really quickly. Send this to the back, right? So more or less, this isn't exact, but every $2,000 or so, I noticed that, or not $2,000, every $200 or so, I noticed that that's basically where my weekly zones lined up, right? So this one's at 1950, this one's at 1750. There will be some subjectivity with how wide you have them. So some traders might have their zones a little bit, you know, thinner. Some traders have them a little bit wider. So it's all personal preference. And again, the prices aren't always going to be exact. So someone might be looking at 1975. Someone else will be looking at, I don't know, 1720 for their zone. It's all personal preference, and it's all how you understand the overall market structure, right? So for me, this is how I had them drawn on the weekly. And you can clearly see that we pushed basically into the midpoint, more or less. Actually, this 161 Fibonacci expansion level, which I'd drawn connecting, let's see. So I actually had it drawn connecting Yeah, that makes sense. So I was confused why I had it drawn like that, but basically I had it connecting this entire bullish impulsive move, right? So I connected, let me redraw this really quickly. So for those of you that are wondering how I drew this, I can explain. So I connected from this low to this high, back down to this low, right? So I'm not connecting to this low, I'm connecting back to point A, and then these have different Fibonacci expansion levels marked down. So this was a 161 expansion level, which notice how it lines up pretty close to the high that we had 2 years ago, or close to 2 years ago. And then this is where we currently rejected this level. Okay, and so right now on the weekly, we still are pretty bullish, but we can see on the daily, the market dynamics are starting to change, right? So this is where I have my daily zone lined up. As I discussed earlier in the stream, right? This is where technically, although I don't have it drawn, I could actually make these a bit thinner. This is technically where another daily zone would line up. Let me actually make them even thinner. So visually, this is a bit more appealing, right? So this is where you have one. The next one is down over here. The next one is somewhere along the lines of being over here. And we can see how the price action has been, for the most part, respecting them. Where, right, when the price action finally broke out of this range around 1840, or not range, zone around 1830, 1840, right, we continued pushing higher. We retested the midpoint, pushed higher. We broke, retested the zone, broke, retested the zone, and then now we rejected this one, and now we're rejecting this lower daily zone. And you can see how it basically closed below these lows over here, right? We had this bearish candle, although yes, it did push below these lows. It technically closed inside or slightly below this this daily zone, but we had this next bullish 4-hour candle that came in and rejected this, right? So for me, my personal take on gold is that right now we are ranging within this small range over here. Let me draw this out. Let's refer to this as a range. So we're more or less ranging over here. And so for me, I would be waiting for a break and retest, or at least a test below the lower portion of this range again, right? So if you're looking at this as a liquidity grab, so where the price action basically spiked below these lows, closed back above, so it trapped some breakout traders that look to sell. Basically, I would be looking for either a break and retest or a return from these prices to push lower. And then where would I target to place a take profit if I'm a seller, right? So if I'm anticipating that we do something like this, where we continue to range and then push lower, this is where I could look for a break and retest setup, right? So a push below these lows, a probable retest of the where we would retest the lower portion of this range. This is where I would look to sell. And then your take profit could be around the midpoint, around 1950 or lower, right? So if you're anticipating a continuation of this, so like I discussed, right, from point A to point B, so from one daily zone to the next, this is where you can also look to take profit. And if we do push down into here, this is where we can probably encounter some type of rejection or some type of consolidation, but we're not there just yet, right? So like I said, we rejected this, so technically the market structure on the hourly is still being held up within this zone over here, right? So we can't predict exactly what's going to happen. We just react and lean towards our probable bias, right? So we look at the market structure, we align ourselves with different probable scenarios, and we're not predicting to a 100% accuracy what's going to happen, because no one exactly knows, right? You have different scenarios laid out and you react to what the market structure does. And so we have retraced quite a bit on a weekly, but the weekly still has about 2 hours left to close. So it might close around the current price, or actually, because the 4 hours so bullish, we might close somewhere up here, but we're basically going to close within this range, right? And then maybe for next week, let's say we do get a spike above the upper portion of this range, this is also where you can look for a short setup, right? So you're basically playing both sides, where if you're not going to align yourself towards a break and retest near the bottom portion, Then you can wait for a sweep above these highs over here, a close back above, close back below, right? So a fake out or a liquidity grab where liquidity is gathered up, right? So breakout traders that are looking to buy, they get trapped. Those that have stop losses that are too tight, they get taken out. So you get this liquidity grab. And then once this happens, if you anticipate this, then you can look to short as well. And then you can target the lower portion of the range again, or like I discussed, you can have multiple take profits. So you can target the midpoint between these two ranges or the lower portion of this range. So it really just depends on your trading style. And I think that just about covers it for today's stream. So thanks for all of you guys that tuned in. So I, for the most part, discussed MATIC. I discussed gold. I discussed how I draw my zones. So play this back if you need to, just to sort of digest all the information of everything that I've covered. And again, last reminder, right? If you want access to more of these live streams, because this is a public one, you know, I'll have these every now and then, so maybe once a month or so, or twice a month. But if you want 20 of them each month, and they're all recorded, so you have all of the previous live streams where I discuss different concepts, whether it's Fibonacci, I briefly discuss price imbalances, I discuss how to take profit, how to set your stop loss, how to enter a trade, how you can get a better sniper entry, right? How to improve your risk to reward ratio, trading psychology. I cover and break down different markets, all of that, right? If you're interested, again, click on the link here, or it's going to be linked below this recording, and you can click to join over here, right? We have multiple members in there every single day. The community is pretty active. I discuss different trade setups of mine, and others discuss trade setups of theirs as well, right? And I review your trades, I review what you do, and I help you improve as a trader. And that's also where you can schedule a one-on-one if you're interested in sort of discussing your trading strategy and you'd like for me to go over what's been working for you, what's not working, and how you can improve as a trader, right? So thanks for joining and have a great day. Goodbye.